gives more time for individuals to buy Bitcoin. But even though Bitcoin is a piece of sort of neutral technology, ultimately it seems to prove to not be neutral. Like, people get interested in it.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Adam Back discusses how Bitcoin could reach $1 million, covering key factors like adoption, scarcity, and market trends. Will it happen sooner than expected? Let's dive in and find out.
Yeah, I mean, I think it's a phenomenon that's here to stay now. And, of course, that strategy works until Bitcoin has reached hyper-Bitcoinization, and everybody who wants Bitcoin has got the allocation they want, and then maybe you get into some more gold-like kind of volatility after that. And so the way, and of course some people are skeptical about the whole phenomena, right? But I think it makes I've been invested in a number of them personally, and the way I get my thinking around how to price what is a fair market MNAV, like the multiple of market cap to treasury, to Bitcoin treasury, is that look, this company has got the ability to borrow at 0% for 5 or 6 years and buy Bitcoin, which has generally gone up in any kind of time frame of that duration. And so that's a good deal. If you could get those terms yourself, you would take the loan, right? But it's difficult to achieve. It needs an operating company. And so, with the convertible notes, it's even better, like a 50% conversion price on a convertible note. You're only taking 2/3 of the dilution while you're getting the money to buy Bitcoin now. So in a way, it's bringing forward some Bitcoin demand, sort of accelerating Bitcoin adoption a little bit. And, the phenomenon where they can sell at the money shares to accelerate it, or a balance of convertible notes and at the money shares is interesting. But I think it's just the market telling us that there's a dislocation between the fiat world and the hyper-Bitcoinized future, right? So I think it's part of that phenomena, so we'll see more of it. And I think it's got some longevity, and you can model what you would think of as a fair price for the MNAV based on, what percentage rate of Bitcoin per share you can expect to achieve on an annualized basis. Like last year, MicroStrategy did 73%, based on a 6.9% announced today, I guess. That's annualized 57%. And so you can see if they can compound at any kind of those rates, then, a reasonable MNAV is quite plausible. Even if it compresses to 1, let's say you say, well, it's hyper-Bitcoinized in 10 years. At that point, the MNAV drops to 1, let's say, all conservative assumptions. Then you can just kind of back out, well, you're buying it at like 1.8 times MNAV. How fast can they accumulate Bitcoin between now and then, and assume that you back out the multiple at the end. It's very plausible to have a reasonable MNAV in between now and then, I think.
You mentioned hyper-Bitcoinization. Satoshi's white paper said peer-to-peer electronic cash. Bitcoin seems to have become digital gold, very successful digital gold. You mentioned Bitcoin passing gold. I think that will happen at some point.
Yeah.
Do you still think that Bitcoin will become kind of a digital currency that's used every day to buy goods and services? And do you think that it must become that in order to be successful?
No, I mean, I think, that you can certainly see in some players that they are more focused on the gold. And I think Bitcoin can become vastly successful, even just as a kind of ETF or savings or
the store
technology. Yeah. But I think that misses some of the potential, because some of the value is driven by the peer-to-peer electronic cash. And I think, if you look globally, the proportion of the working population that is informal economy, it's about 50% of the global workforce, right? And so for many of those people who don't have banking relationships, or maybe only via their employer or upstream reseller, it gives them global access to the markets. So I think that is actually, has a very large target audience, and there's lots of scope for adoption. And open permissionless networks tend to innovate faster as well. It's kind of a lesson from the internet, right? That's why the internet became such a huge thing and innovated so quickly, where previously typically state-controlled telecoms monopolies were really slow in terms of innovation.
What are you most worried about, or what do you think the biggest risks for Bitcoin are right now?
I think most of the risks have receded. I mean, certainly in the early days, we were, a Blockstream, and many individuals involved, either as developers or investors, were concerned that, a government would ban Bitcoin. I think that the transition has actually been quite smooth. Of course, some countries ban Bitcoin, but, those same countries ban Facebook and Twitter and so on, right? So it's sort of par for the course. And, I think, as Safedine says, it's not really optional. The people, the individuals, the countries, the companies with the harder money will win, and their capital will get reallocated. So, everybody will ultimately have to participate.
Ethereum is facing one of its most crucial moments, with its price hovering near 2-year lows. The second largest cryptocurrency recently hit $2,070, its lowest point since the start of 2024. A sharp 7.4% drop on February 28 led to more than $200 million in liquidations, adding to investor fears. This downturn has significantly dampened market sentiment, with crypto investment manager Xerox Lawist noting that Ethereum's social sentiment is at its lowest in a year. Over the past week, Ethereum has plunged 24.5%, marking its worst weekly performance since 2022. A weekly close below $2,300 would make it the lowest since November 2023. Even more concerning, Ethereum is currently trading below its 200-week exponential moving average (EMA), a key indicator that has historically signaled major market bottoms. Since 2020, Ethereum has only closed under this level 14.55% of the time, suggesting a potential recovery in the coming weeks if historical trends hold. However, the technical charts reveal a dangerous double-top pattern, which could push Ethereum down another 30% to $1,500 if the $2,000 level doesn't hold. Crypto investor Jason Pizzino warns that a close below $2,100 could put Ethereum in more trouble, making this price zone a critical battleground for bulls. Despite the bearish outlook, Glassnode data shows Ethereum's cost-basis distribution price of $1,890, indicating strong demand at this level. Some traders believe investors are still accumulating Ethereum, positioning themselves for a rebound once the selling pressure eases.
It's okay if, governments don't adopt too quickly, or not at all even, because it gives more time for individuals to buy Bitcoin. And I think, part of what helps in the world is the thinking that comes with self-sovereignty. And, even though Bitcoin is a piece of sort of neutral technology, ultimately it seems to prove to not be neutral. People get interested in it for a number of different reasons, because they've got an electronic cash need, or because they made an investment, and they get philosophically interested and start to change the way they interact economically with the world. So I think, it's actually good in a way if people have, some more years opportunity to buy, but I'm kind of feeling that it could be gradually then suddenly moment this cycle, or pretty soon, but we'll see how this cycle plays out, right? Whether diminishing returns is broken or not, whether we see a kind of extracting value from gold via ETFs at the margin, phenomena coming in later in the bull cycle. So
when you look at the market today, it feels like there are what I'll call Bitcoin companies, which are focused on, layer one, what Bitcoin originally was. There's been a rise of L2s, side chains, and many other components. Some of it is focused on scaling. Some of it is focused on bringing the R&D that's happening in altcoins over to the Bitcoin market. What's kind of your evaluation of, these things being built beside or on top of Bitcoin, and everything from the Lightning Network, Liquid, these NFTs, etc.? What's going on, guys? I hope you're enjoying this episode, but real quick, I wanted to tell you, we just launched a brand new show. It's called From the Desk of Anthony Pompliano. Guess what it is? It's me sitting at my desk talking to you straight to the camera, explaining what's going on in current events across business, finance, politics, and pop culture. If you want to learn every single day, make sure you go over to the brand new YouTube page, From the Desk of Anthony Pompliano. Hit the subscribe button. You'll get a video every single weekday. Hope to see you there. Let's get back to this episode.
Yeah, I mean, I think it turns out that blockchains don't scale very well. And so layer twos are sort of inevitable to at least be able to manage the retail payments and the trading and like share transfer and share settlement kind of use cases. Now, one thing which is not ideal, but, technology is what it is, right? And everybody's trying to push the envelope on this, is that you get the best security assurances by holding your own UTXO, and UTXOs are hard to scale. And, layer 2 UTXOs are not as hard assurance as layer 1. So really, in an ideal world, everybody who wants one should be able to get a layer 2 UTXO, but we don't really know how to do that.
XRP is facing intense selling pressure, dropping 9% in the last 24 hours to trade around $2.05. This marks the third consecutive bearish session, during which the cryptocurrency lost a key support level at $2.20. The broader crypto market has also taken a hit, with the total market capitalization declining by 6.6% to $2.66 trillion. The downward momentum has triggered nearly $25.5 million in XRP futures liquidations, with long positions making up a massive $22.2 million of the total, signaling strong bearish dominance. A key factor contributing to XRP's decline is the ongoing uncertainty surrounding Ripple's legal battle with the U.S. Securities and Exchange Commission, SEC. Despite a partial victory in August 2024, when Ripple was fined only $125 million instead of the SEC's original $2 billion demand, the case is far from over. The SEC appealed in October 2024, arguing against the court's decision that XRP itself is not a security for retail sales. While the new SEC administration has softened its stance on crypto, settling cases against major companies like Coinbase and Uniswap, it remains firm in its appeal against Ripple. This lingering legal uncertainty continues to weigh on XRP's price, keeping investors cautious. For XRP to avoid a deeper correction, bulls need to defend the psychological $2 support level. If it fails, the next major downside target is $1.76. with a possible drop to $1.50, where the 200-day simple moving average (SMA) currently sits. However, with the Relative Strength Index (RSI) signaling oversold conditions, a recovery could be on the horizon if XRP reclaims $2.20 as support. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.